Every Sunday, I will go within the weekly charts and frame my weekly bias based on what occurred the prior weeks. So, with this, I want to get into weekly profiles and I want to frame the logic behind why this works. Price is fractal across all time frames, every candle, whether it's a 1 minute or 1 week. This can be broken down into a simple delivery sequence, either open, high, low, close, or open, low, high, close. This means a weekly candle is not random, it is just a compressed version of what price is doing internally on a daily or 4 hour chart. So just like you take a 1 hour time frame candle and break that down into 5 minute structure, you can do the same within the weekly candle to get an overall whole week bias. Now, I want to set the stage of this is just a conditional metric, just like any other time frame price action analysis, but it is a good way to get an overall bias for the whole week of the dealing range. So when you talk about either bullish or bearish weekly candles, we're really talking about how the open, high, low, close sequence happens and how it is likely to form over the course of the week and where that delivery shows up on lower time frames. So this is like the key understanding of the foundation of a weekly profile. Now, there's a million videos on weekly profiles, and this is just everything I've learned over the course of studying for the last year, basically every day, and just trying to see how I approach the market. So these are not groundbreaking concepts. I just think they're key foundational concepts that a lot of people overlook when they're as like big as you can frame the whole week. Like you can literally take the previous week and how the price has been trading and form a bias for the whole fucking week. So you can take in, if it's going to be a bullish candle, I can frame Monday, Tuesday, probably going to form low of week. So I can expect bearish delivery Monday and Tuesday. So then I can then drop into the 4 hour, 1 hour, and then down to the entry sequence on the 5 minute, 3 minute, 1 minute, and frame bearish direction delivery. Now after that Tuesday, Wednesday low of week, if it's a classic sell week or classic buy week, you can get into and look in. Weekly profiles are everywhere all over the internet. I'm not going to depict them because they've been depicted a million times. But you can then frame that Monday or Tuesday, usually Tuesday, Wednesday low of week, and then get on side with price to its true delivery into the higher time frame draw you have. So things like that. So when you come down, I meant to change this, but that's what it is. Price is fractal. So when you get into price is fractal across all time frames, we're getting back into the basis of open, high, low, close or open, low, high, close. The weekly candle is not random, though it can be up and down and you can get consolidation weeks and things of that nature. If you have a true directional bias, most of the time based on key areas it's tapping into, it's not random. So the weekly candle, as I've already stated, is just a compressed daily deliver or 4 hour delivery. So 4 hour delivery you can use more. So I just do it from the basis of like visualizing the market maker buy model and market maker sell model on the 4 hour time frame. Now on the delivery it's a little easier. There's a frame like, okay, it's going to be a Tuesday low of week, but 4 hour you can really see the structure of the weekly candle broken down. And then you reveal the internal structure based on the lower time frames of a larger candle. So when you get into if prior week runs bearish, or sorry, this is one take Jake. If I don't know why I just said that. If prior week runs previous high or closes bearish, then we can say the current week favors an open, high, low, close delivery. So basically, this is the frame of a if-then statement for reversals. If your continuation, if you close over the previous candle's high, then you can frame an open, low, high, close to continuing bullish delivery. If you close over the bottom wick or the low of the previous week, then you can frame an open, high, low close for a bearish delivery. These are just statements of examples of reversal sequences. So if the prior week runs a previous low and closes bullish, you would then have a bullish C2, and you can then frame an open, low, high, close delivery for the whole week. So you're just setting the stage for a whole week of price action in the back of your head. So when you're aligning these time frames, because true expansion is when you're aligning multiple time frames, so higher time frame to intermediate time frames and then lower time frames to get on side with price. If you have all these in the true direction of price, it's much more likely to then expand in the true direction, or you get like 2 hour, 3 hour, 4 hour trades. So noting all of this, I want to make sure that you know that expectation is conditional and it's not predictive. This is not okay, this is the one thing I see and it closed over the fucking previous candle high, so it's going to. it must be, it will deliver into highs. No, this is completely conditional, and this is where framing where price will reverse is key. Because if this stuff that I'm about to get into does not happen, then it's all not good. Like, and then it's not gonna happen. You know what I'm saying? Like, if this, so that's why like price, when you break it down, especially in dogmatic forms, like, it's just if-then statements. If this occurs, then this will occur. It's all life is, mostly. Not mostly. I don't want to get into the concept of life here, but with price specifically, it's a lot of just if-then statements. If this occurs, then I expect this. If this doesn't happen, then I don't expect that to happen. So if I have a bullish continuation week and that motherfucker opened high and then hits a key level high, then it's completely flipped. I'm no longer expecting bullish delivery on the week. I've now seen that price has opened high into a key level, and I will expect price to then go low and close to form a bearish candle. So that's what we'll get into, framing where price can reverse from. So reversals must occur at relevant levels. This is key on the 4 hour, 1 hour. Really, if you're going to focus on like a full week reversal structure, you want to focus on like a 4 hour time frame. And you also want that within the fair value gap, old swing highs or lows or order blocks, but I rarely use those. I'll use them on the daily time frame, but I use them more so for like entry functions when it comes down to the lower time frames. So if we have like open, low, high, close, change in state of delivery, I more so classify them as change in the state's delivery. I use daily order blocks, but not much. Mostly fair value gaps, old swings, highs and lows are what I'm going to be using to see price engage that level and see what it does after. Is it going to continue through, or is it going to reverse from? So yeah, price rarely, especially higher time frames, does not reverse in the middle of nowhere. Now sometimes it does. Recently it's really been doing that, where you'll have like an old high that you're staking your TP on, and then that motherfucker will go right 2 ticks away and then reverse off of it. But mostly in the confines of your statistical edge, you'll see that mostly old swing, high or low, or fair value gaps, or EQ of ranges, rather, is where price will deliver to. So weekly expectation defines which levels matter. So what I mean by that is, if I'm focusing on a bullish continuation week, then a 4 hour fair value gap residing below in respect to EQ of the weekly candle is going to be my target to then put in a 2-stage cracking correlation and reverse from. So I want to just touch on all of this before I got into how I'm going to frame this week. I'm not going to cherry pick some perfect week. Like I said, there's a million videos on weekly profiles, a million concepts that have been covered regarding these. So all that yapping about concepts have come to an end. Let's actually apply them in the charts. So with this, I'm going to go over what I assume will happen with December 15th price action, or the week of December 15th rather. It's going to be interesting because this was a weird fucking week. Her last week was, being that Friday did some just full on dump shit on NQ. So we're going to have to frame based on that. And I already kind of cheated. I've already looked at the daily chart a little bit, as some of the run throughs as I was talking, and fucking up and be like, fuck, I'm going to restart this. But I have 2 different narratives for the week, and we're going to have to see how they form. So let's jump into it. So with this price action here, we have 2-stage crack. So you have 1 and then 2. Oh, that's a terrible 2. So 1 and 2 there. So you have 1 being the SMT, 2 being the PSP, with NQES closing bearish while YM closed bullish. So with YM being so high in the range, what I assume may happen is the trend as it closed over this wick here for a bullish continuation is that we will continue into all-time highs. A lot of times, I hate trading at all-time highs. What you see with all-time highs is they like to keep creating all-time highs. Like, it'll just trade, reaccumulate, go higher. So that's weird. That's kind of fucky with YM here. But what I think will happen based on the weekly signatures, or what we've been provided off the weekly chart, is that it will continue up, open high, so that formulation of, or that bearish candle being formed, the open high, to then the trigger being manipulation of previous all-time high level here, the swing high, and then dump. Not dump per se, but that will be the trigger for price to then expand lower, and we'll see how that occurs. Because if we have Monday, Tuesday high, then okay, that is the if. If Monday, Tuesday high into all-time high, I would like to see then reversal signatures off of this all-time high to continue lower. With that as well, I would like to see some sort of consolidation out of Monday, Tuesday on NQES, not pushing too high, not invalidating the EQ of this previous weekly candle range. I would like to see EQ kind of respected, which is kind of a tall ask. Not entirely, but we're going to have to get two Monday, Tuesday days. They're going to have to self-sacrifice and just be kind of choppy to then all-time high manipulation, maybe on a Tuesday, Wednesday high of week to then go lower. And that's kind of what I see from the weekly chart. Just, I can't speak. Strictly weekly chart bias speaking. I think that's all you can really frame, being that NQ and ES both closed over, except this one didn't. What I don't like to see is these equal lows here. So these are definitely going to get ran. I don't imagine we're going to put in a third equal low there. That would be really weird, just triple equal lows, but it would be a good target some other time. Just it would be weird in this time to print it. So we had NQ, strong candle, ES strong candle, but then YM strong candle to the upside. So I think that all-time high manipulation to then go lower is the trigger that we might see for price to dump and kind of resync here. So that is my weekly bias. Now let's hop onto the daily chart because it gets a little different. So if Monday, Tuesday higher, then we might see low on Thursday, Friday, or Wednesday, Thursday, Friday rather. So yeah, let's hop into the daily chart to refine this more. So with this, when I hop into the daily chart, I see this fucking range we're operating within. This, if you pivot, let's get a little fib. Boom. Okay, there's no EQ there. Let's get, do I have, premium discount. Cool. All right, so we have my premium discount here. If we copy all these bad boys and paste them, what we're operating with is this premium discount range. Can we agree? Yeah? And you, fuck yes, we don't have to chart it on it. I'm just kidding. But we have this as expansion range, just straight expansion range higher with a bunch of LR that fucking 10 a.m. on Friday just dumped on. But what we could be seeing on the daily time frame is just this expansion into retracement into EQ of this premium discount range to then go higher. So if Monday, Tuesday goes lower, respects this daily formation of the candle, so respects this EQ, like we were breaking out respecting EQ of the weekly candle, but say we see this respected and then go lower and come into this range, just depends on what's the lagging and leading asset. Obviously this is leading, so if it dumps Monday, Tuesday, it'll probably hang around here and then push into all-time highs. This one being the most the lagging asset is probably going to trade lower and then go higher. So we'll have to see some strength switching there to qualify that, and two-stage cracks lower. But I really like these getting ran here. So on ES, if we continue this open high, respect EQ, the key level somewhere right here, I might look for Monday to trade into these equal lows. So even though I am framing a weekly bias, I am an intraday trader. Like, I don't hold trades swing wise. I don't hold them for multiple days. I focus on intraday price action. So a lot of times weekly charts will get nulled. Not entirely. I'll still keep it in my brain. But when I see shit like this, where we have this strong bullish closure from Friday, bearish closure, bearish closure, holy shit, I can't speak. I would look to see EQ respected, hit, and then trade into these equal lows here to break this SMT, being that we've traded here on NQ and we have it on ES here, and then this is just leading into the high, so we'll see what it does. But based off the daily chart, I can see fully Monday, Tuesday going lower into heading towards discount, creating a two-stage. So that'd be SMT, two-stage SMTs, two-stage crack, PSP, all this stuff. Multiple videos that are way better than what I can explain it as. But two-stage crack and then go higher. So those are my two different forms of bias. We're going to see how it gets validated. If Monday, Tuesday trades higher, hopefully it trades all-time high into YM asset, then we're going to see a bearish week. If this Monday, Tuesday just goes lower, then I'm going to assume Wednesday, Thursday, Friday. So that's why some people just sit out Monday, Tuesday. What does the weekly say? You can improve your statistical edge and your returns based on sometimes sitting on your hands, a lot of time, almost all the time, sitting on your hands and just letting price do what it wants to do. So unless it's completely consolidation week, then that sucks. But a lot of times you can sit on your hands Monday. Okay, how did Monday trade? It's going to give you an entry into what the weekly time might trade as. Okay, what did Tuesday trade as? But that's kind of like, scared money don't make money. You're sitting on your hands all the time. But sometimes you might want to sit out, especially after a large range of Friday here. Like, bro, this shit's just going to chop within this range probably, and Monday's going to be bullshit. So you're just going to have to see how Monday prints. Monday prints a certain way. It goes lower. Okay. Now you've piqued my interest. Tuesday prints, goes lower again. We have a two-stage crack within like this fair value gap here. Boom, I can see trading back into the EQ of this range here. Now, if the assets just kind of consolidate and YM keeps pushing higher, manipulates this all-time high, I can see that as a trigger as it kind of just hangs around this. The fair value gap hasn't formed yet because this candle hasn't closed, but around fair value gaps on like the 4 hour and such, hangs around there. And then once this takes all-time high, boom, we dump. So main thing that I really like is these equal lows. I don't know when they're going to hit, but I want these. That's going to be a trade. So it's going to be sick to be like, boom, ES trade into equal lows, boom, smacked. Hopefully it's not, damn, this is how I got offside on the trade, but I really think that's going to occur. It could be quick on the week, so watch out for that. But yeah, hopefully, 8 minutes. I just yapped for 8 minutes, fuck. Anywho, let's go ahead and end this. So, weekly time frame, I'm thinking open high. Daily's kind of pointing towards open low in my brain a little bit. So we'll see how the week develops, and I'll keep you in frame, keep you updated, because I'll post tomorrow how to market review of how the indices traded on Monday, Tuesday, Wednesday, Thursday, and we'll kind of keep updating this weekly bias as the week continues. So. Be safe, don't get stopped out, don't get fucking chopped, and be careful with this December price action.